And now Carol Chock, who is with the Tompkins County Legislature, and she is also a member of the Tompkins County Council of Governments Gas Drilling Task Force, and she specifically serves on the Committee for Land Values and Assessment. And I know there's been quite a group of people that have been working hard in that. So, do you want to welcome Carol?
Hi, have you got my slides? Yeah. Okay. Forgive me, this is not my usual talk, so I'm going to read a bunch of it. And mostly what I'm going to do is introduce Greg May, who's been working with our committee, but I do have an introduction as to sort of how we started working with Greg and the work that we started doing and why. So I'm going to provide an introduction to the Tompkins County Council of Governments Task Force on Gas Drilling Assessment and Land Valuation Subcommittee. We're only one of a bunch of work groups. Many of the others are working on more environmentally related issues. But we started looking at assessment questions, and we still have questions. There are challenges in knowing the answers. A bit about who I am and how I got involved. I was elected to the Tompkins County Legislature, where it seems like I can't get away from gas drilling issues in every realm. I chair the Facilities and Infrastructure Committee, where we've been working on our road preservation ordinance, and vice chair of the Planning, Development, and Environmental Quality Committee. And there I'm liaison to the Water Resources Council and the Tourism board. So all of those committees are hot and heavy in gas drilling issues. And then I'm actually alternate liaison to TCOG for the county, but I did say I would be our main person on the gas drilling task force. And there, since other people were taking responsibility for other aspects of this question, I agreed to chair a committee to work with the county assessment department. Many of our departments are feeling the need to prepare everything from social services to public health, in addition to the more obvious water and air and all of the towns, of course, working with land use jurisdiction that we don't have. In Tompkins County, we place a particularly high priority on making sure that properties are equitably and professionally assessed. We're one of only 2 counties in the state to have an all-county assessment office rather than have assessment happen piecemeal in different towns. And so we actually feel like we set the standard here. So if your value is higher or lower than your neighbor's, or than property in another part of the county, your assessment, and therefore your tax bill, should reflect that. It shouldn't be based on who you know, who you have had dinner with last night, but what will your assessment be? And with gas drilling, we asked our assessment department to look at the question: if your property value goes down because there's drilling on your neighbor's land, are we prepared to know that quickly and reflect that in your assessment? Similarly, if land speculators come in and drive property values up, and therefore somebody's property value goes up, will we know to assign that property a higher assessment? That would be only fair. We weren't surprised, and we also thought that this was a question that was for the future. When and if gas drilling comes, this would be an issue. We were not surprised to find out. I went into that committee knowing that we didn't have full information. For example, we need a new field in our database, even to track where there are leases. That information is kept in the county clerk's office, and all the fields are used up. So I thought, okay, I'm going to be prepared to come back to the legislature for some money for a new database. Currently, we keep that lease information in the notes field, where, of course, it doesn't always get put in uniformly. We were surprised to find out the extent. We're surprised to find out that our public assessors were not able to find the information they need. We were surprised to find out that the problems that our public assessors were having were also prevalent in the private market. Private appraisers were having the same issue, those who come and appraise your house so that you can decide about a purchase price, and so that banks can use that information to decide whether to give you a mortgage. Need that information to assess their risk when the appraisers need that information to appraise the property properly, and the banks need that information to assess their risk when they make that loan to you. Realtors need to know where there are leases to answer questions from potential buyers. And homeowners need that information to get a home equity loan. Even when you aren't selling your house, there are times you want to take some of that value. When we started hearing that banks were already reluctant to give mortgages on properties with leases due to these issues, I thought, okay, I have some concerns about gas drilling, but that's got to be alarmist. Gas drilling under these new terms, hydrofracking, is something that New York State is deciding about and will happen in the future. But people were telling me this, so I said, okay, we'll call in the bankers and we'll ask. I've also gotten an education about banks and lenders. Banks are regulated by one set of state and federal bodies. Credit unions actually are regulated by another, and they're all technically lenders. So more properly, I should be using the term lenders, but we think of them as banks. So we invited a whole group of real estate professionals and interested citizens to work with us. And I've got to say, this group has been one of the most incredible, dedicated group of people I've ever had the pleasure to work with. I can't believe how much work they've all done outside of their normal jobs. We found that the way in which the signing of leases is allowed in New York State and in many places across the nation is making their lives more difficult, necessitating more hours of work on their part. Note that the costs of the additional work by the real estate industry, in the end, will be directed to you, the property owner, in order to fully use your property. These local and regional lenders and others provide an important service to the community when they help you find and finance your home. And I do want to stress that what these lenders do is backed by something real. These are not derivatives of derivatives made out of thin air that we're talking about. This is real property that backs their business, our homes, and most of us cannot afford to own our own homes without them. Lenders provide this important service, but they can't do that out of thin air because there is something behind it. So if it costs them more to help us find, buy, sell, mortgage, take equity loans, and otherwise enjoy the ownership of our properties, they will need to charge us for this extra work and for the extra risk that they're taking on. I've gained new appreciation for the time horizon that lenders look at when they make these loans. I'm in the public sector. We set a budget for next year. We're agonizing now, and if we make a mistake, we'll have a chance to do it again next year. And raise your property tax bill. If we find we can save money, we'll try to lower it, and we're committed to doing that. But when one of these lenders makes a decision, they are making a decision, a business decision, not for a year. I mean, look, the homeowner's insurance, they're only deciding for a year. They decide there's more risk to providing you insurance, they'll raise your rates next year. But when a bank makes a loan, they're looking at what? How long is your mortgage? A 20, 25, 30-year time horizon. So they need to assess those risks. And I think that they are, the fact that the banks are expressing concern is a very good indication that we should carefully look at the level of risk that this activity is going to engender on our part. So our committee ended up focusing on 4 issues, and I'm not going to go, I have another talk where I go in much more detail to what those are. And one of them has to do with this ability to mortgage property, and Greg will focus on that one. Another one has to do with the ways in which lease information is unavailable. New York State, the way that New York State does or doesn't require companies to actually go right away and in a complete and thorough and timely manner file the information affects the ability of all of these industry people we're talking about to get information. And Barbara Lifton went right out when she learned about this and entered her 5 of the 6 bills that have to do with this information, or all 6, but they all touch on it. I'm going to talk about the cumulative impact. Ramping up changes the picture. Cumulative impact is that term that refers to the ramping up of the activity and the way in which the effect of this activity at this new scale affects individuals, banks, markets, and governments is going to make a big difference. And that ramping up is aided and abetted by compulsory integration. Other speakers have touched on some of what I was going to on the history of compulsory integration. And I think it's important to realize that why this longstanding practice is now an issue, and in some ways in which I think that it may be, I haven't quite formulated all my thoughts on this, but that it may be possible to separate the notion of compulsory integration for situations where there is actually pools of gas under the ground, and that of hydrofracking, based on the science. I'm a planner. I do believe that there are cases in which there's a public purpose to require participation by people in certain activities. The Federal Highway Act was one. Not everybody who has ended up with a highway through their community was happy about it, but it was decided that there was a national purpose to requiring that. Allowing communities the right to zone is one where it's decided that the collective rationale will usurp, and courts have upheld the fact that there's a right of the public to determine some things that are not superseded by the rights of individual property owners. And compulsory integration was adopted initially by New York State, and I believe it goes back decades. I'm not sure exactly how the bill in 2005 was different, but and by many other states, to protect the rights of landowners. So when gas is extracted from that pool under the ground, the public sector, in essence, said to the gas companies, you must compensate landowners who didn't choose to sell you their mineral rights. If you're going to take the gas that sits under their properties, because you're putting a pipe over here and that gas is going to be sucked out from underneath your property, you have a right to get paid for it. But I believe that there's several ways in which that rationale is now outdated. We get asked a lot as we speak about the issues of assessment, appraisal, and lending about why this is an issue now. What is different? There's been gas drilling for years. Many of the laws and practices related to gas drilling have in fact been in place for decades. Why didn't we hear from banks before about their problems with loans on properties with drilling? And why didn't landowners complain about compulsory integration before? And I'm not up to that one yet. The answer for the things we've been working on has to do with two key differences. One, the geology is different in this case. That gas is not in a pool that rises easily up from the ground due to pressure when companies insert the pipe, but it's in an entirely different kind of formation, a geological formation, that doesn't voluntarily emerge. The land must be blasted under the home or property to allow the gas out. And further, there's a science now where the companies have the ability to route that drill head underneath the ground. They don't necessarily have to go in a straight line anymore. They can route that drill head. They're very proud of the fact that they can route that drill head back and forth and around your property if you didn't choose to participate in the pool. So due to those differences, I believe that New York State could now require gas companies to obtain voluntary permission from each and every landowner in the path that they would like to drill under. That may not be the same if there are still places with pooled gas, with gas under the ground. Okay. The second difference has to do with cumulative impact and the way in which ramping up means that all of us are going to have to address this in a way they didn't before. So what are some of the risks to you as a property owner from compulsory integration? There's the obvious environmental risk. There are risks of additional taxes, and we're not entirely sure. I don't have a clear answer, again, on this, as on many things. Now you can go to the tax slide. So we spent a lot of time looking at exactly how does New York State tax gas production. I can go into this more later. Sharon Anderson helped us take the sketched out template we did of how does this very complicated tax formula work, and put it on a slide. So I'm proud to be showing it. It's new. The important things to know are that just like I think it was Ken talked about the ability of the companies to subtract expenses before they pay you your royalties. In the same way, gas companies get to subtract all of their expenses before we calculate how much tax they owe, property tax they owe, from this activity on the money that they make. Not only that, they get to divide, every commercial activity gets to divide their net costs, the gross income minus their net income, by a factor of financial risk. For an apartment building, that's 6%. For Cayuga, AES Cayuga, that is 10%. Gas companies are allowed to use a 17% rate because this activity is deemed to be more risky. Each element in this formula has been created since 1978. They have been setting this formula, and it builds in bias, we believe, actually in almost every one of those boxes to the gas companies. And I can go into that more if you'd like later. So what does this mean for you? Your property gets valued for tax purposes in two ways. The land value is set as always based on the market and comparable values of nearby properties. Once gas is being produced, there is this assessment based on the amount of production, and that is billed directly to the gas companies, although there's some issues in knowing exactly how we can find them, and as pieces of ownership get sold again and again and to many parties, it's not clear that New York is prepared to track that. It's not clear yet how the change in your lease status that you didn't choose will also result in your taxes being affected. There'll be a general rise or fall in property values for the square miles that will become part of the spacing unit. So I just want to be clear that we don't have final conclusions, but you will be affected in some way. And let me just mention back to that formula, while I have Barbara and people who know the state very well, I would just point out that anything that the state now imposes as severance taxes, that they're talking about for meeting state expenses, or for permit fees, because they're talking about additional permit fees, get subtracted here. So they will detract from what the local level gets to receive at the end of that formula. And that's something that we're talking about with the state now. Another risk is such that transfer of risk and impact on financial risk from gas companies to you. With compulsory integration, if the gas companies hit pay dirt, you do stand to benefit financially if you're in that unit. You share in the profit even though you didn't originally choose to take on a lease. If they don't hit pay dirt, they get to move on to another property, and yours still feels the effect, the environmental and other effects in changing community character. So, I'm going to let Greg do most of the talking about what happens with your mortgages. Can I get a mortgage? The answer is not clear. It's not simple. The market is tightening as drilling approaches. And he can tell you more about that. I think the message is people shouldn't panic, but you should weigh in. Please weigh into the DEC comment process. Take one point that you learn here tonight and do so. Greg, do you have an introduction for Greg, or can I give it? Okay.